Okay, so fintech giant Revolut just made a move that could seriously change the border between our good old bank accounts and our digital assets. They're making a really simple but really powerful promise to basically get rid of all the annoying friction when you move between regular money and crypto.
And at the heart of it all is this statement from Leonid Bashlikov, their head of crypto. $1 means $1. It just cuts right through all the usual noise about exchange rates and hidden fees, doesn't it? It's such a simple idea, but trust me, the implications are huge.
And we're not talking about some small-time experiment here. Revolut is letting users convert up to nearly $600,000 a month with no fees. That right there tells you they are dead serious. They're building a tool not just for casual crypto dabblers, but for people and businesses moving some serious cash.
So, what does this promise actually mean for Revolut's 65 million customers? And maybe more importantly, what's it telling us about where finance is headed? Let's dive in and break it all down.
So here's the headline news. You can now take your US dollars inside the Revolut app and swap them for stablecoins like USDC and USDT at a perfect one-for-one rate. That means no fees and no spreads. You know that tiny little difference between the buy and sell price that always seems to chip away at your money? Yeah, that's gone. Revolut is just eating that cost.
Okay, so how are they actually pulling this off? And is it a secure, reliable option? Let's take a look under the hood at how it all works.
First things first, a quick refresher. A stablecoin is a special kind of crypto that's built to, well, stay stable. Unlike Bitcoin or others that can go on a wild ride, stablecoins are pegged to a real-world asset, in this case, the US dollar. And that's exactly why they're so crucial for a service like this to even exist.
So here's the whole shebang. Zero fees. We've covered that. It also supports the two biggest stablecoins out there, USDC and USDT. And here's a really key detail. It gives you multi-chain access. That means you can use Ethereum, Solana, and Tron. So you get way more flexibility and can even hunt for lower transaction fees. And the cherry on top, it's all regulated in Europe, which adds a massive layer of trust.
And yeah, that regulation point is a very big deal. Revolut just got a license under something called MiCA, the Markets in Crypto Assets Regulation. This is a brand new comprehensive rulebook for the EU, and it means Revolut is playing by a clear set of rules across 30 different countries. That builds safety right into the system.
Now, this is about way more than just individual users. For small and medium-sized businesses, especially those in countries with, let's say, shaky economies, this feature could be an absolute lifeline.
I mean, just look at this comparison. If you're running a small business in a place like Turkey, the old way of sending money internationally is just painful. You're getting killed by awful exchange rates, crazy SWIFT fees, and payments that take forever. The Revolut way, it flips the script. You get faster access to your money, way more control over your company's cash, and you stop that slow bleed of value that happens with every single transfer.
And Elbrus Yilmaz from Outrun VC just nails it with this quote. He says that a clean, one-to-one on-ramp like this turns stablecoins from something you just speculate on into working capital infrastructure. Just think about that for a second. Stablecoins are becoming as basic and as essential to running a business as a regular old bank account.
That whole shift from speculation to infrastructure really helps explain why Revolut's move is part of a much bigger trend. We're seeing a global race where all the major financial players, both the new kids and the old guard, are scrambling to bake stablecoins into their core services.
I mean, just look at this timeline. The momentum is incredible. You've got MoneyGram launching USDC wallets down in Colombia. The company behind Zelle is planning to use stablecoins to make cross-border payments faster. Even SWIFT, the original pillar of international banking, is building its own blockchain infrastructure. And then you have Western Union planning its own stablecoin on Solana by 2026. The race is definitely on.
So what does all this mean for the future of finance? What's the real takeaway for the money sitting in our own digital wallets?
You have to see this one-to-one conversion as just one piece of a much larger puzzle that Revolut is building. They already support over 200 tokens. They have a pay with crypto feature for everyday stuff. What they're doing, piece by methodical piece, is just erasing that line that separates your traditional bank account from this whole new digital asset economy.
And that leaves us with one final, pretty big question to chew on. As these services get more and more seamless and more integrated into how we live our lives, are we actually watching the end of the line between what a bank is and what a crypto wallet is? Are they just merging into the same thing? That is something to think about.